Hello and welcome to this closing bell special edition with me Yatin Mota on Moneycontrol.com. Well, if you talk about the Indian stock markets, today was a muted trading session. As you all know, since Friday there were tensions escalating in the Gulf countries with Iran and Israel at locked horns, and more importantly, on the weekend we had the US B-2 strategic bombers destroying the 3 nuclear sites for Iran. That sent crude oil boiling to a level of $78 per barrel. Not good for Indian markets as well as Indian economy, because we are a crude importing nation, which obviously increases inflation as well as the costs for Indian corporates. But today, as we opened for trade, Nifty fell more than 200 points to probably look below that 25,000 mark on the Nifty. Psychologically, obviously the start of the week was quite muted, and the psychological level of 20,000 was breached. But intraday we saw some recovery, especially in the mid caps, wherein the mid cap index closed with gains. Now, if you look at the Nifty, it was a 140-point loss. We closed nearly at 24,971. Sensex down 500 points, but as I mentioned earlier, almost 0.4% higher for the mid cap index. And if you look at the Nifty small 100, therein we saw almost 125 points kind of a gain, which is almost 0.75%. So good moves on that front, and hence we had the advanced decline ratio also moving better, nearing 1:1. Now, sectorally, obviously Nifty, media, metal, mid caps were doing well. However, IT stocks post the Accenture numbers, we saw some bit of profit taking, and so is the case with auto and FMCG stocks, clearly looking slightly weaker in trade. But if you look at the Nifty 500 gainers, we had stocks like Trent and BEL. Remember, both of these stocks are a part of Nifty 50 now. So both of these stocks on the first day of the entry gained nearly 3.5%. Bajaj Finance, Hindalco as well as Adani Enterprises were the other stocks on the gaining side. Losing, obviously, as I mentioned, IT stocks under pressure. So we had Infosys, HCL Technologies losing 2 percentage points each, and we have L&T Hero MotoCorp also on the losing side. But if you look at Nifty 500, a lot of small finance banks in focus because of the RBI norms. We'll talk about that in detail. Z topping the charts, 12% higher for that stock. Chennai Petro, MRPL, and we will discuss these stocks in the session today. But yes, 8 to 10% gains coming in for those stocks. L&T Food, Ola Electric were the other stocks which were slightly nervous in trade. Let me start with the guest, because today is a market heavy day, and hence a view is important. Aamar Singh from Angelone is joining us live. Aamar, thanks so much for taking out the time and speaking to Moneycontrol. When it comes to the market setup, and Nifty at close to 25,000 levels, do you think the Iran-Israel conflict would probably send the market slightly nervous this week as well, or probably do you think market is now taking support close to this 24,800, 25,000 zone?
I would say that markets definitely seem to have taken this Iran-Israel conflict in a very positive, I would say, in its stride. And also the latest development of the US bombing, as you rightly said, of the 3 Iranian sites, that definitely markets reacted to it. So markets corrected by more than 200 points, have pulled back. And what we're seeing is that advanced decline is also positive compared to the overall segments. And what we're seeing is that across the board, the large cap, the small cap, and the mid cap, we are seeing some very strong moves and momentums cutting across sectors. So I think that's a very positive development. And also, despite, as you rightly said, crude oil prices still hitting higher levels towards 78, 80 mark. So that is a cause of concern. But I think what the markets are really factoring in as of today, somewhere the expectations are that this is not going to last for a very long period of time. So, and semblance will, or maybe sanity will prevail, and there'll be a dialogue of sorts, and maybe things will cool off in the near future. That's what the markets are expecting, both domestically and internationally. So that's the reason we are not seeing that sort of crack in the markets.
Right. Talking about the small finance banks, and today, we have the RBI circular which said that the priority sector lending for small finance bank, which was earlier targeted at 75%, is now reduced to 60%. This is a structural positive according to various brokerages, be it Citi or Morgan Stanley. We had the entire small finance bank do well in trade. RBI also, we have seen that apart from the policy, out of policy initiatives are also boosting the entire banking sector, be it rate cuts, be it buying back bonds, or probably giving some leeway on the policy front. Amar, your views on banks. You think the small finance bank would move, or would you prefer PSU banks or stay with the large cap banks? What is the exact setup on the Nifty bank and the banking stocks?
See, if you look at, first of all, Nifty bank, the Nifty bank is definitely very close to its record highs. Whereas if you look at Nifty, Nifty is still far off from its record high. So clearly shows that banks have definitely been of interest amongst the investors post the developments, like in terms of the 50 basis point rate cut. Apart from that, the 100 CRR, 100 basis point CRR cut that starts from September onwards. So these are certain positive developments definitely for the banking sector, and also there are expectations that the credit offtake, the credit growth should be strong in this financial year and going forward. So I think, and the banks are comparatively well placed in terms of their managing their NPAs as well. So I think these are factors which are working in favor of the banks. I would say a mix of uh, the three would be more suitable. So having a combination of private sector bank like Kotak Mahindra Bank or ICICI Bank could be a good option. Amongst the public sector banks, one can look at SBI. One wants to look at large cap, or maybe a Canara Bank also can be from a medium term to a long term perspective. And amongst the other banks, one can look at, like we've seen, it's a very strong up move in high happening in AU Small Bank. So if you look at this quarter itself, the stock is up by almost 50%. It's trading towards its record high. So this also is one stock which one can look at from a medium term perspective.
Right. These are the views coming in for the banking stocks. Talking about the entire refining space today, MRPL, be it other stocks like Chennai Petro or probably Reliance Industries from the day's low, obviously the stocks recovered. Obviously, the talk here is because of the tight supply in diesel as well as the refining markets. We have the margins which have moved up. In fact, the refining margins and the diesel spreads in Europe have moved above, the $10 per barrel mark. That is a 30% plus kind of a gain this week itself. Because of the tensions, we have seen all of these refining stocks do well because of the short supply or whatever be the reasons, or various shutdowns in parts of Europe. Overall, in terms of trade setup, let's talk about Reliance first, and then Amar, let's also focus on Chennai Petro. Technically, what do you think a stock of Reliance Industries can do from here? And do you think after the 10% rally in Chennai Petro, there are still legs for upside?
So first, talking about Reliance, what we are seeing in Reliance is that Reliance did witness a recent rally from almost 1150 levels to currently trading around 1450 odd levels. So almost a 35% rally we've already witnessed. Currently, what we are witnessing in Reliance is more or less consolidation, because over the last almost 20 to 30 trading sessions, Reliance has been trading in a zone. So upside would be capped around 1480, 1500 levels, whereas downside, Reliance has got very strong support coming around the 1380, 1400. So this 120 point is the range for Reliance. Overall, if you ask me what the trend is definitely positive for Reliance, no doubt about it, from a long-term perspective, from an intermediate-term perspective, and it's waiting for a consolidation, and only a breakout above, I would say, the 1480, 1500 level would then take Reliance higher towards 1600 levels. Now, talking about the other stock which you mentioned, Chennai Petro. So if I look at the Chennai Petro, what we are seeing here is that the stock has moved up sharply today, almost up by 11%. Over the last 2 days, the stock has moved from almost 600 to 700 plus, and volumes have also been significantly higher. Now, if I go back in time and look at this stock in the last week of May, so somewhere the stock had made high of almost 735, 740 levels, and from there it had corrected all the way towards the 600 mark. So so the stock is likely to meet with some sort of resistance around the 735, 740 zone. But taking that out would mean that the stock is poised higher, and gains of anywhere between 8 to 10% on the upside is possible once it sustains around the 735, 740. As far as support is concerned, the stock has got good support coming in the 650, 660 zone.
Right. So these are the views coming on Reliance as well as Chennai Petro. As I mentioned, the margins on the diesel front have been quite strong, and exporting companies probably benefit because they simply refine the product, refine diesel, refine various gasoline products, and then straight away sell it for a margins. And if you look at the Singapore GRM, that has touched almost $6.5 per barrel, which means that Indian refiners would be at least making $10 per barrel kind of a margin on the refining front. So we'll watch out for this space. Before we let you go, Aamar, in terms of portfolio positioning in these volatile times, which are the stocks that you are currently recommending to your clients, and what would be the strategy? Would you buy stocks in two parts, or probably look to buy the dip, or start deploying today?
So we've been bullish in the market despite the correction, and we've been of the view that buying on dips is what is to be done. And given the current market scenario, yes, there is I would say some cloud of uncertainty with regards to the Iran-Israel conflict, and that's not a small one. And it has got significant ramifications in terms of inflationary concerns and all that. So having said that, I would say one stock one can definitely look at is from the banking space. RBL Bank is one stock. The stock had corrected significantly, but it's now in a strong uptrend. Currently, it's around 235 odd levels. So this is one stock one can look at buying from a short-term perspective. One wants to buy. So for an upside target of 267, whereas the stop loss is 230. So this is one stock one can look at because the structure of the stock has changed significantly for the positive, and the stock is trading on the higher side. The second stock one can look at is Engineers India Limited. This is again one stock which has moved up significantly, almost up by 42% this quarter itself. And currently it is in for some consolidation. It has pulled back. Currently it's around 228 odd levels. So at the current levels, one can buy with a stop loss of 209 and a target of 257 on the upside. So it's more or less you have to be definitely cautious, not go all out, but go maybe in parts. So that will be a good idea.
Okay, so EIL for targets above 250, and we have RVL Bank. That is also one stock which will be on the radar. Obviously, FNO has been on the curb side, but obviously RBL Bank is one stock wherein there have been various stocks including a fundraise. Thank you so much, Aamar, for speaking to Moneycontrol and taking out your time, sharing your views with us. Before we let you go, any disclosures?
Thank you.
That probably this is a market wherein we could see some action.